Joining us this morning, Needham's Rajvinder Gill, who cut his target on Micron and lowered estimates across mobile and PC suppliers. Raj, it's great to have you. At 50, 52, actually closer to 51 this morning, and 40 cents, nearly cut in half since January. Was there, I mean, they telegraphed that this thing directionally was weakening. Were there real surprises today?
I think the magnitude of the guide down was pretty extreme. They missed the top line by 20% for the August guide, and that translated to about a 35% drop in the earnings. And so the magnitude was a little bit more extreme than we thought. We had cut estimates for a lot of our mobile and PC chip suppliers the prior week. We were expecting maybe a 10% cut, so they came in about 20% or more. And I think the second thing that was surprising was, I guess, the abrupt nature of the order cuts from a lot of Micron's smartphone and PC customers. It was a fairly abrupt cut versus, say, 3 months ago. The industry has seen these abrupt cuts before, though. I mean, we saw this during the trade war with China, which started in late 2018 and carried into 2019. That impacted the semiconductor industry pretty significantly. So we saw a pretty big inventory cut at that point. We saw it during COVID. The industry ultimately rebounded and was resilient. But I would say that the main issue really for Micron, I think we have to be make a distinction here, is that the China business, which is about a third of their revenue, declined 30% year over year. And so that had a major impact on overall demand. So this was very much a China issue. The economy of China is still pretty weak. We didn't get a sense from talking to management that the China economy is going to improve anytime soon. And that's kind of spreading beyond smartphones and PCs into maybe cloud spending in China. On the positive side, data center business for them grew 50% year over year. Auto grew, industrial grew, networking grew. And they're fairly positive about those trends going forward. And so with the stock trading at roughly 1x, 1.2, 1.3 book value, we feel, some of the downside or a lot of the downside is starting to get priced into the shares.
Right. I'm glad you brought up data centers. They did say we're seeing some enterprise OEMs wanting to pare back their memory and storage. Obviously, compared to their comments on PCs and phones, it's much more bright. But do you worry about the tone of their commentary on data centers?
They made kind of a distinction what was happening within data center. So cloud hyperscaler spending. So hyperscaler spending, CapEx spending from folks like Meta, Google, Amazon, Microsoft. Those trends are still robust. The end markets are robust. They are deploying artificial intelligence systems to compete with companies like TikTok. So there's a lot of advanced artificial intelligence built into these systems. That requires a lot of memory. That's a secular kind of technological trend that's not really going to slow down.